Hi, and welcome to the March mortgage update. My name's Richard Purnell. From the Mortgage Home, and we are your buy-to-let mortgage experts. So, bringing you the March update, as I say, and let's get straight into Market Watch. What's been going on in the buy-to-let mortgage world over the last few weeks? As always, we start with a commentary about the Bank of England base rate. As we know, in February, it went up to 0.5%. Now, at the time of recording this, we're on the 9th of March today. So it's next week that the committee will be meeting again. So, crystal ball time, what is going to happen? Well, I read the minutes of the last meeting because that's how sad I am. And here's the thing: 5 of the committee members voted to increase the rate by 0.25% in February. 4 members wanted it to go full 0.5%. So there's a clue that there's quite pressure and a demand there from the Bank of England committee to increase rates, more significantly. So watch this space that we don't get another rise in March. Inflation rates are still racing ahead of the 2% limit that the government are wanting rates to be at, and hence that upward pressure still on rates increasing. So we're probably expecting another 2 rises this year. That's what the experts and economists are telling us in the industry. So really, does it matter when they go up? They are going up. Mortgage rates from the high street banks are also starting to increase as well, as I mentioned last month. So the only message I would still want to say to our clients and landlords is start reviewing anything that's already on SVR rate. Start reviewing anything that's due to end and have a product expiry within the next 6 months. Because even though you're 6 months away, we can probably get you a mortgage offer out with a 6-month expiry date, but lock you into buy-to-let rates in March 2022 instead of waiting until summer 2022 when rates will undoubtedly have increased. What else has been catching my eye this month? Well, here's a couple of lenders here on that second bullet point that are responding. And these are just 2 examples. I'm seeing quite a few scenarios now where lenders are offering a wider choice of longer term fixed rates. So here we've got Keystone with 7-year deals and a company called LendInvest. They're a smallish company, but their bread and butter are portfolio landlords. We use them quite a lot, and they're offering some 10-year fixed rates. So I think these guys are really, as I said, responding to demand from landlords who are wanting stability. So if you are not looking to actively grow your portfolio, and by that I mean wanting to review every 2 years, pull out equity to use as additional deposit to expand that portfolio a little bit quicker, if that is not you, you're looking for stability, you're not looking to sell your properties as far as you can tell, then these 7 and 10-year rates are really worth looking at. I had a quick look earlier today, and there's rates around 3.5% for 7-year, certainly under 4% for a 10-year fixed rate. So that, in terms of hedging your bets, that could be a really good bet. Look, if there's any expats, listen to this, or you want to forward my mortgage update to any friends, colleagues who are expats, who are either thinking or are active in buying buy-to-lets back in the UK. Well, Cambridge have joined the party now. The expat market is clearly a niche area, but it's an area that we specialise in. We work quite extensively with foreign nationals and expats. And so noticing that Cambridge have joined the party, they've now launched not only buy-to-let deals, but holiday lets, which is really great for us to see because that's a growing demand in itself. Cambridge offering rates of 3.64. And if you want to fix their deals, then yes, there's a fee of about £2,000. But interestingly, they're also offering a 2-year discounted variable rate, which might not be everybody's cup of tea, given what I've said about the upward pressure on rates. But it comes with a nil fee, so you get that £2,000 in your pocket. So you know, even if there are rate rises this year, you're already starting with that £2,000 in the kitty to offset any increase in mortgages. So I think that is definitely worth looking at if that's you. Now there's a company called Together. Yeah, whether you've heard of them or not, they've been around a long time, a bit like me. I've been around 25 years, and Together were there right at the start. Now, maybe a little impolitely, I would call them a lender of last resort. And that's because they've always done deals where not only the banks, but even the secondary non-banking lenders would say no and say they didn't have appetite for. Then Together would come in and mop up that sort of market for applicants that have either got really complex situations, maybe situations that other lenders deem slightly higher risk, maybe your adverse credit is particularly high. And so Together historically have offered rates, particularly on buy-to-let, around 7%, which might go, oh my God, well, no wonder I've not heard of them, because I wouldn't give them the light of day. And I get that. If your situation is that you can go to those other lenders, fine. But what if you can't? Well, there's always been an offer on the table. Why am I mentioning them today, however? Well, today they've actually come out with rates starting at 4.5%. And that's almost mainstream. So if you are a landlord who historically have been declined, maybe there are a few skeletons in the cupboard, and you know your existing broker or banks have been saying no to you, then this might be a way into the market, the way into getting some property. Look, if you can get a deal at 4.5%, 5% now, yes, you're probably going to have to commit for 2 years, but see it as a stepping stone, see it as a bridge. And perhaps in those next 2 years, you can tidy up that adverse. That adverse will be older, or whatever that other issue is. Can you and your broker work out a plan that you can improve that over the next 2 years, and therefore in 2 years' time you can refinance into a better deal? Then that might be for you. So yeah, that's why Together are on there. Now, I want to go straight into Spotlight this month, which not only am I seeing, but the team are seeing, sadly, on a really regular basis, is where clients come to us because they've had an offer accepted on a property, but it's the first time they've spoken to us as the broker. And that puts everybody under pressure. Brokers are putting you as the customer under pressure, saying, right, you've got to get these documents together. I need these signatures. I need to arrange to go through a fact find. And of course, the estate agent, quite right now, there's such demand for properties that's been relentless, frankly. It's not something symptomatic of March 2022, but it just surprises me why landlords are not getting themselves mortgage ready. And so what do I mean by that? So that when you walk into that estate agent, you can be putting your offer down with some certainty. What do you really need to be doing? Well, talking to your broker week before you start viewing the properties, that's the ideal time to start engaging with your broker, updating the fact find that you have with him or her. Get yourself your credit report. If it's something you've not done for a long time and you've not done had any credit checks done for a long period of time, get an Experian or an Equifax report and send it to your broker. We would be delighted if our landlords sent us a copy of a credit report. We can flick through that. And not only can we be saying that there are certain things that maybe need to, could be an issue with getting approved for a mortgage, but a good broker will also be giving you tips and tricks to improve your credit score more generally that can have the benefit perhaps of getting you better deals and lower rates. So get your credit report sorted. Also, get a portfolio health check done. That's something we do now as standard for all our clients going forward. It's something we brought in earlier this year. So we get you to give us quite detailed information about your background portfolio, because again, most of our clients and I'm guessing people that are listening, watching our video updates, are portfolio landlords. So the due diligence done by lenders on you guys, that they go to a further degree. So we can look at your background portfolio, do all the stress tests that a lender would do, but doing it now and giving you ideas of how you might improve those ratios and checks so that your portfolio looks healthy. And the sooner you do that, obviously, the sooner you know you're going to get approved. Get your supporting documents into us. Again, even before you've seen a property. If there's information might come to light, because if you hold on to the documents, say, oh well, they're going to go out of date and we'll send you it once that a property accepted. Give you a couple of examples of things that come out when you send us the documents that, again, if they're not right, put you under pressure on the back foot to sort out. Bank statements, when they come through, too often we see the bank statements have an address which is your previous address because you haven't bothered changing them because you're online banking. But when I come along and say, look, I need your 3 months bank statements and it has your old address, it's not acceptable to lenders. So then you all of a sudden you're hot-footing it down to your bank to get the address changed, and you've got to, there's time spent on doing that. Maybe later on in the year, certainly for you self-employed people, there'll come a time when your April 2022 tax returns will be demanded by the bank. As soon as we get into the 1st of October, many of the lenders we work with will no longer work off your April 21 tax calculations, they want April 22. So again, this is for later on this year, but if you're sending the documents in ahead of time, we can be saying, well, those documents are out of date, we need you to update them, and you can be talking to your accountant and getting those ready before you've had your property accepted. And so things like that, get those documents sent through. Proof of deposit is another common thing where if you send us all the proof of deposit, we can be saying, well, actually, I now can see that the deposit is coming from a source that may not be acceptable to us, to a certain lender. And again, if we're having that conversation up front before the pressure's on, then as you can see, we can get our ducks in order so that when you do put your offer in, your estate agent is going to be blown away by how organized, how professional you are. You've already been pre-approved. Your broker's then been able to get a decision in principle done, and that can be waved under the nose of the estate agent and hopefully put you at the front of the queue. So if you're thinking, wow, maybe I need to do that, then at the end of this presentation, there are ways of getting in touch and organizing that health check, getting that decision in principle done, just chatting through what are the elements that you need to have in place and making sure that you are going to get approved at the first time of asking. Okay, let's move on now. Something that also comes up really regularly. So from time to time, I do mention this on these mortgage updates. I want to start off though by asking a question about life insurance. If you can, just if you're not sat on a bus or on the tube listening to this, raise your hand if you've got life insurance. Yeah, okay, it looks a bit silly. You know what I mean? Have you got life insurance already? Great. All right, keep your hand raised if you've got that life insurance in a trust. Now, when I ask that question into an audience, between half and 3/4 of the people that first put their hand up to say they've got life insurance then take the hand down because it's not in a trust. So it's a massive educational exercise that I'm trying to do here for our clients and the wider audience, that you really, really should be thinking about putting either your existing life insurance policy into a trust, or if you're thinking of taking out any new life insurance, then of course put it into a trust at that point. Okay, Richard, you might be saying, why should I bother? What is it and why should I bother doing it? What is it? Well, essentially it's a legal wrapper that falls around and wraps around your life insurance policy. Is a legal document. That's essentially what a trust is. What does it do and why should you wrap it around your life insurance? Well, there's two main benefits. The first one is if you've ever been involved with probate as an executor or as a potential beneficiary, then you'll understand that probate being granted can take a long time. So If your life insurance is not in a trust, then if you were to pass away, that payout of life cover, whatever that happens to be, 100,000, 200, £500,000, goes into probate because it forms part of your estate. And therefore the executors and solicitors and those involved have to work through and get probate granted, which can take months. And sadly, I've seen sometimes in excess of a year to have probate granted, which means until it's granted, that life insurance policy is locked away and can't be got at by the people that were desperately in need of it, the beneficiaries, the spouse, the partner, the children, whoever that might be, that really financially would benefit and can pay the bills, pay the mortgage off, whatever it happens to be. It's locked away. And so you're actually creating another financial problem for those loved ones that actually you set it up for them to make life easier. And here it is locked in probate. So when it's in a trust, the key point is that it does not form part of your estate. It's outside of your estate. And that allows the insurance company to pay out the life insurance benefit, that 100,000, that lump sum, whatever it happens to be, straight to beneficiaries within days or weeks of you passing away. Massive, massive benefit there. The other benefit is around inheritance tax. So going back to that point, that if your life insurance is not in a trust, and let's say it is £500,000 worth of life cover, then that falls into your estate and adds to the overall asset value. That could then mean it might well push you into inheritance tax bracket and having to pay 40% away to Her Majesty's government, which I'm sure was not your intention. And if you can think, if £500,000 was all subject to IHT, inheritance tax, 40% of £500,000, well, in my mental arithmetic, that's £200,000 of the 500k that your beneficiaries will not see. You wave bye-bye because that's going to the treasurer. If you were to simply have put your life insurance in a trust, all £500,000 goes straight and direct to the people you set it up for, straight to your beneficiaries. There is no tax for the same reasons as I said earlier, that because it does not form part of your estate. It's deemed not to belong to you when it's in a trust. So it does sound a bit complex, a trust, doesn't it? Well, in my experience, and for the life insurance advisors within the team, their experience, for 99% of our clients, it's a very simple process. The life insurance companies we work with have templates available of trusts, and they're appropriate, as I said, for the vast majority of people. And as a insurance advisor, we can even fill them in for you. And all we then need to do is send them out to get some signatures, get them witnessed, and then we can lodge them with the life insurance company. And then, do you know what? You can forget about it and get on with your life. How much does it cost? Well, we don't charge anything. We don't charge any fees when it comes to giving any advice on life insurance or other related protection products. And if we have to put it in trust for you, if that's appropriate, no cost at all. If you've got an existing policy and you're thinking, well, the policy is still right for me, or I think it is, but I need to put it into trust, still talk to us. We might be able to help you, point you in the right direction, show you how to put it into a trust. And like I say, and then you've got that peace of mind, and it might have saved you an absolute shed load of money. So again, I'm about to go on the next slide, but one, if you want to have a chat with any of the team, whether it be mortgage or life insurance, so just chat that through a little further, then we'd be delighted to try and give you some clarity on that. Just to round up this month's update, as usual, these are the main services that we offer. Whether it's bridging, short term, that could be anything up to 2 years. If you're buying, not really to let out, but maybe you want to add value to something, do some renovations, improvements, but then sell it. In other words, buying to flip, but you want finance, then we can help there. If it's commercial or semi-commercial is usually something like a retail outlet on the ground floor with perhaps flats above. That's a typical example of semi-commercial, or indeed fully commercial, whether it's as an investment or you're an owner occupier, then we can advise in all those areas. Different types of buy-to-lets, of course, the main ones being HMOs, multi-units, holiday lets a little further down, as well as your obvious family let properties. Development finance, we work with our clients that are actually building a property or converting it perhaps from commercial to residential, might be another example. We can help there. And finally, auction purchases, where there's quite often a time pressure to get completed. 28 days is fairly typical, and again, there's finance available for all those different types of products. So if you want to have a chat about any of those, any projects you're looking to do of that nature, we'll be delighted to throw our two penneth in. We've got 25 years of experience in this arena, and our bread and butter, as I said right at the start, is working with landlords on any property of that nature. Clearly we do residential as well, but we do have a slant towards you landlords and your particular needs. Really, just the last slide here for today is different ways of getting in touch, or if you just want to jump onto our website, there's additional information and information sheets about various aspects of the various buy-to-let mortgages that we do. And if you want to book an appointment, have a free review, do that portfolio health check that I mentioned earlier, or just how do you get mortgage ready? How, what are trusts? How might it apply to me? Is it relevant? Do I have one already? Because many people don't really know whether they've got a trust surrounding their life policy. If you send us your documents, we can help on that. So book a review, follow that link. If you can cut and paste it or retype it, or if you're unsure, just give us a ring and we'll set an appointment up and have a chat, and hopefully we can help. So that is our mortgage market review for March. Hope you've enjoyed it. If you want to know more, want to subscribe, and you've not done before, then there should be a subscribe button maybe just below the video. Be delighted if you want to just click that button, or please leave some comments. If there's areas that you want us particular to shed a light on in future updates, then that would be great to give us that bit of feedback. And if there's anything that you agree or disagree with in the updates, then again, really I'd be delighted to have a little bit of feedback from you guys, and that'll all feed into future reviews so that we're starting to get stuff out and content that's relevant. Other than that, hope you have a great month. Thanks for listening, and hopefully we'll see you soon.